from that point, we have further built on gains. It's been a good day. Broad-based, mid-caps doing well, large caps doing well. Of course, led by the two of the biggest stocks, Reliance and Infosys. But things have looked good today. This is Closing Bell. I'm Anuj with me, Surabhi. Hi, Surabhi. Good afternoon.
Good afternoon. Anuj, I guess markets around the world are saying Brexit? What Brexit? Who cares about Brexit, right? Because it's just green all over. We seem to be participating. Your thoughts? Because, I mean, I guess we're still in the broader range. And one interesting thing that caught my eye today was that corporate banks, which are the market's favorite area of late, today they've underperformed. And
that's perhaps where the opportunity should be for the last hour. Frankly speaking, I don't think Brexit was an issue for the market. I didn't even remember that something like that was around the corner, to be honest. Look, when Brexit had happened, that day we had the biggest rally. That day and before that, Brexit, that was actually the start of the bull market. So, these things look good for headlines. But what today has told you is that, you can't do random things in market. You can't be just, you can't be just, sort of go by the gap and decide to chase the gap and then at lower levels try to chase on the short side. This is a market in which you have to respect levels, and if you get your levels, in that case you try to buy. Like I think in the case of Nifty, yesterday the market went very close to support mark. We were discussing this yesterday, and if you bought yesterday and today you've done nothing, you didn't need to do anything. Today was a no trade day where you should have just let yesterday's longs run and do the work for you. Now the point you made about corporate banks, perhaps that's given you an opportunity on the bank Nifty, because yesterday's low was the 20-day moving average. Who knows? Perhaps the last hour you see the bank Nifty seeing a bit of a short covering, because my sense is that those who would have chased long positions, they would have perhaps not succeeded and taken some shots in the market, perhaps decides to clean them out. So it's a strong market. It's supported, of course, by two big stocks, Reliance and Infosys. But I think the way Bajaj Finance, Finserv, some of these consumption names like V-Guard, Pidilite, I think so the way some of these stocks are moving, Godfrey Phillips, for example, advanced decline is quite good. 2:1, I think, on any day is a good advanced decline and decent volume as well. Let's see. I think the way the market has shaped up, last hour could be really interesting. I think perhaps you may add another 30-40 on the Nifty and perhaps maybe another 50-60 on the bank Nifty is possible. But that's for the day. The larger point is that the closer you're buying to 10,700, 750, you're making money on the Nifty.
Well, that's really working out for now. That's how the trade has gone. Some updates coming in on Edelweiss's distressed asset fund. They've been doing a lot in that space, and there's more money that they're looking to raise. Well, we've got a lot of ground to cover. Let's get started. Here is what is lined up on Closing Bell today. It is green across the screen. The market is at the high of the day, driven by the likes of Reliance Industries, Infosys and TCS. Yes Bank sees another strong day of trade. Mid-caps also trade higher today, but they overall lag behind the frontliners in terms of the index. We'll discuss all of these cues with the fundamental experts, SP Tulsian of sptulsian.com, Mehraboon Irani of Ginny Gems Consultants, as well as market expert Anand Tandon. Now, what more could 2019 perhaps bring for the market? How will uncertainty surrounding events like Brexit, US-China trade talks, as well as our own general elections impact investor portfolio calls? We ask Vaibhav Sanghvi, co-CEO of Aventus Capital Alternate Strategies. And of course, as always, lots of technical ideas coming your way for trades of the last 1 hour. Ashwini Gujral and Mitesh Thakkar joining in.
Okay, by the way, some financials are surging right now. NBFCs, it's led by HDFC. Just pull out the chart on HDFC, that stock right now at the high point of the day. Apart from that, you have Equitas. That also is at the high point. I think in the morning we saw some move on Ujjivan. Now the move is shaping up in Equitas, so that's looked good. Metals have seen some short covering today. Perhaps does not change too many things, but Vedanta and a couple of other stocks, JSW Steel, Tata Steel, they have seen some amount of short covering. And mid-cap IT, of course, has looked good today through the day. KPIT, Hexaware, Mindtree, all these stocks doing well. But how should you position yourself in this last hour? We have Ashwini and Mitesh now joining us. 400 points higher now on the Sensex as we speak. Ashwini, good afternoon. Your thoughts for last hour and what would be your stock calls?
See, for the last hour, my sense is that the Bank Nifty 20-day moving average does not have the buying support to take this market higher. And it's possible, like the way Bank Nifty held on to its 20-day moving average till now. Now the Nifty does that, and Bank Nifty kind of lags behind. I don't think from tomorrow the Bank Nifty will suddenly start to outperform. This rally, current rally, is now about the IT stocks and Reliance, etc. I don't think Bank Nifty will show great follow through. Having said that, it is a rally, and 10,900 possibly should get crossed unless the Bank Nifty really starts to underperform. So I don't think being in financials is really the way to go unless the Bank Nifty goes back to the 50-day moving average where better support can come in. Having said that, Cummins is a buy with a stop of 858, target of 880. Bajaj Finance is a buy with a stop of 2560, target of 2620. And BPCL is a buy with a stop of 335, target of 360.
Okay, so those are calls that Ashwini is going with for the last 1 hour. Lots of stocks flying around on the mid-cap screen. By the way, Castrol is an interesting one. Almost a dead stock last so many months, and second day running, big move on Castrol, up almost 5%. So there are lots of stocks that are having a field day today, even beyond the index. Mitesh Thakkar is with us. Let's also get his thoughts on today's action. Good afternoon, Mitesh. How are you reading it and trades?
Good afternoon, Surabhi. I think it's pretty good to me. I've been talking about 10,850, 860 as the upper end of the range. You're practically there. Hopefully, we'll break above that and close above that. And once that happens, 10,980, 970 targets will reopen again. I think Castrol, you just pointed out, I think that was a recommendation in the morning today for me and also yesterday. So I think that remains good. But that about two calls which are there right now. I have sell on Voltas with a stop at 540 for targets close to about 500 to about 503. And Adani Ports is a buy. Keep a stop at 377. Look for targets of 394.
Okay, fair enough. That's some trading ideas. We have SP Tulsan of sptulsan.com now joining us, and in a bit Mehrboon Irani will also be with us. Ms. Tulsan, good afternoon. Your thoughts first on Wipro. That's the top Nifty gainer today, of course, ahead of bonus. Or the announcement that they'll consider bonus. It's been a rank underperformer. You think it can cut some of that gap that exists between itself and the top players?
So, Anuj, actually Wipro has not been able to cheer on the results front. I agree that they have been coming out with the buybacks and this time again with the bonus news. But actually, if you really see the situation now, maybe for last about 12-18 months, bonus has never been a trigger for the shares to get re-rated, because that's just an arithmetical exercise. And now market doesn't give much credence. So it all depends that, we have to wait for and focus on the results of the company only and not on the bonus. Maybe this near-term up move, which we have seen, will have to be, corroborated with the Q3 numbers, which are due maybe in this week itself.
Okay, by the way, one of the major pillars of today's rally is Reliance Industries, 3% up on that stock, 1120.28. There was some brokerage commentary that came in. You have a couple of foreign brokerages which are very, very optimistic on what lies ahead. In specific, if I could talk about Goldman Sachs, maybe we'll just get those graphics up for you. They're expecting third quarter EBITDA to rise 21%. And then there is CLSA with a target of 1,500. They are very optimistic on the retail business. Anuj, the problem is every time I start seeing 2028 kind of, EPS projections and revenue targets, I get a little uneasy, though this is a behemoth, though this is a giant. But anyway, I mean, that aside, how do you look at this sudden, spurt of activity on RIL, which was so sideways last few sessions?
I think it had this coming yesterday. It ended at the highest point, though it didn't gain much. And for last 2-3 days, it was showing signs. It's corrected a bit. Look, first of all, a disclaimer, of course. Reliance owns TV18 and Network 18, so whatever we say, take it with pinch of salt. But my limited point on Reliance is perhaps it was a leader which corrected about 17-18%, and you reached a stage where the selling stopped. Now there's a lot of talk about whether this quarter there will be inventory loss or how the GRMs are going to be. going by the historical evidence of last 3 or 4 quarters, there's been nothing to complain about the numbers. So probably that's what the market is banking on. You don't want to go into Reliance's earnings with short positions for a stock which has already corrected too much. But I think perhaps Mr. Tulsian would be in a better position.
Absolutely. Mr. Tulsian, sir, your thoughts? RIL, what are your expectations from the third quarter? And generally the advice on the stock now?
See, Surbhi, I think that people will be more keen to know the results of the Reliance Retail and Reliance Jio. I don't think that Petchem will first, if I come on their old traditional business, I don't think that the Petchem will really be disappointing. Maybe the EBIT margin of closer to about 19.5%, though the reduction or maybe fall in the Brent prices has been seen in Q3 of about 11%. I'm just talking on an average with a downside of about $53 per barrel as on 31st December. So maybe that will see. I'm not too much concerned on the top line, but the margin of the EBIT margin of about 19% may be expected for the Petchem division, so that will not disappoint. Coming on GRM, because of the Singapore benchmark having corrected or fell quite a lot, maybe how much premium you can give on the GRM, it's difficult to give a call, but maybe $8.4 per barrel should be taken as a reasonable, including inventory losses having built in or maybe having factored in. So on that Petchem and refinery, I don't think that market will really be too perturbed, because already the refinery fall in the GRM have been factored in, but the Reliance Retail and Reliance Jio will really be the big kicker, because in Reliance Jio about 288 to 89 million subscriber, and in case of the Reliance Retail also the growth is seen to be quite high. So overall, and maybe below line, I'm expecting some kind of positive surprises to be seen. Maybe either in the form of the deferred tax liability getting reduced, or maybe the other income, because mind it that in Q2 there was an other income of the one subsidiary stake sale. So on a sequential basis, one should not get confused of the same kind of results. So if you factor in that 1,000 crore plus profits having made by company in Q2 on account of that stake sale, which was not included in the EBIT margin of the Reliance refinery, then I don't think that there will be any kind of disappointment. On the contrary, market will really be cheerful with the results or with the segmental performance of Reliance Retail and Reliance Jio.
Fair enough. We have Mehrbun Irani also joining us now. Mehrbun, hi, good afternoon. Some signs of life in cigarette stocks. ITC, of course, for last few days we've seen. Today there's a big move in Godfrey Phillips, up 7%. Your thoughts?
I would take it that way, that the market has taken it in its stride that, okay, fine, there is going to be no change in indirect tax. So if anything, it's going to be the GST Council which will decide. So till the time we don't have any next round of the GST Council meet, I don't think market is too much concerned or perturbed about the fact that there could be a hike in duties, because unlike every year, I think this time with a vote on account in a way, or an interim budget, whatever one terms it, the fact is that it's going to be no changes as far as indirect taxes go. So I think that is one factor which possibly the market has taken a note of it, and possibly is giving a thumbs up in the short run, at least certainly to cigarette companies. And if you look at ITC, I think among the frontline stocks, among the index heavyweights in its own way, I think this is one stock which has just done nothing over the last many months. So maybe it is a time for it to move. So I personally would, that's exactly what I'd advise an investor this morning. He was holding ITC. I just told him that I personally believe that he should wait for the quarterly numbers to come and then take the next call. But as of now, it's a clear hold. And from a shorter term angle, in fact, those who are adventurous among the traders possibly can go in and buy even at the present 295.96, because there could be a 3 to 4 to 5% appreciation from here in the very short term, because the market, the way the stock is moving is clearly indicating that way.
Okay, that's a view on some of the cigarette stocks. So many stocks on the move. Tata Motors, DVR, not just the main stock. The DVR itself is having a great session today, 2% up there. Bharat Forge, by the way, seeing plenty of buying as well. And there are other stocks excited. CG Power, for instance. Some of these absolutely almost forgotten stocks, or underperformers, if I could say that. They are coming back on the screen. Mehrbun, good afternoon. I want to talk about one stock that you've picked out for us today, and that's J&K Bank. Now, quite interesting. Of course, the market is really giving them full points for coming clean this quarter with the IL&FS disclosure. But what else is getting you excited? I mean, of all the banks, why J&K Bank? Why is that a buy for you?
On the whole, I turned very positive for PSU banks. Now, J&K Bank in specific today is basically, I've never been a great follower on quarterly results basis. And I don't care much for it, especially when I feel this could be a multi-year great story. I think the worst for J&K Bank is clearly behind it. But despite that, when I saw the numbers which the bank announced in December, I think what attracted my attention is, let's not go on to the YOY growth and other things. The fact is there is a clear growth as far as loans and deposits go. Point number one. Point number two, I think the bank is clearly on track to report an earnings of around at least 6 to 7 rupees in the current year. And I personally believe an EPS of 10 rupees will come much earlier than what the market anticipates. Even the NPA cycle seems to be well under control despite the provisioning for IL&FS mess. So I think at 38, 39, 40, the stock definitely offers decent scope for appreciation, and I will not be surprised to see a price of maybe a 55 to 60 coming over the next 2 to 3 quarters. What I'm trying to state is the bank is clearly on track. The worst for the bank is behind it. The deposit growth, credit growth is clearly showing that the NPA cycle is fine. So I don't see any reason why one should be not looking at the present price. Even the price to book value, if you see, is quite attractive for investors to look at it afresh without possibly thinking too much about the mess the bank had found itself into maybe a couple of years ago.
Okay, by the way, just look at Indiabulls Housing Finance intraday chart on that stock. Just about 5 minutes back, there was a bit of a decline. That was bought and how, and now the stock at the high point. The other stock which has looked good through the day-to-day is IFB Industries, where you have Mr. Kachulia picking up some stake. I mean, that's where you have it in the disclosure today. IFB Industries is the stock that we're talking about, 15% higher.
Absolute green day across the screen. Lots of stocks that are flying around. So perhaps a good time to get some more trades in. Sandeep Wagle is with us. Good afternoon, Sandeep. What are you going with today?
Afternoon, Surbi. I would go with a buy in a Cummins, stop loss of 865, target of 909, and a buy in a Reliance, stop loss 1119, target 1155.
Okay, Sandeep, thanks a lot for those trading ideas. BEML is surging now, 4% higher on the stock. Bharti Airtel, now, had too many of these moves. Most of them have flattered to deceive. But for whatever it's worth, that stock's making highs of the day. That's BEML, up 4%. Bharti Airtel, up about 1% now. DLF also making a bit of a move. Today, like we discussed, there's short covering clearly visible on metals. So Nalco is the latest one to join that list. Mehrbun, we've been talking about IT stocks. You have an interesting choice, L&T Infotech. What a story it's been, both the L&T stocks. Both disappointed in listing, but after that, just a one-way run. But why are you bullish on the stock even right now?
I am quite positive on certain mid-cap stocks, and L&T Infotech is definitely on top of my list. I think, yes, the fact is the stock has been a great performer. The fact is the stock is enjoying a little bit of a higher discounting as compared to others. But you need to understand, Arush, that I think this is an early, I would say it's the beginner or the early entrant as far as digital technology goes. And the complete IT space is now moving from legacy to digital transformation spending. And L&T Infotech, being an early entrant, definitely reaps the benefits. I think the company has got its own verticals in which it is doing well. There is good traction, orders are good, and that includes BFSI, that includes energy, that includes industrials. And there are certain under-penetrated verticals where the company is making concerted efforts, which includes packaged foods. Now, if you look at the financials of the company also, I am quite confident that the company should earn an EPS of not less than 85 rupees in the current year, which should be at least over 100 rupees next year. So with a 100 rupees EPS next year, I think a discounting of 20, a discounting with the company has been enjoying. And I believe that it scores very high on execution ability. L&T Infotech as a company, the management has done a wonderful job so far. So when a company is scoring high on execution ability, there is traction, there are fresh orders coming, the company is making efforts to go into under-penetrated verticals, and with 100 rupees earnings, I don't think the market will feel shy of giving it a valuation of around 20-21 times. So I have a personal target of 2,000 to 2,200 for the stock coming over the next 2 to 3 months. So it's a clear 20% appreciation from here with not much of downside risk. And IT space, if you look at the numbers which TCS and Infosys has announced, and along with the banking space, where I think it's a clear-cut cocktail for a good recipe, I would say, for bank stocks to attract more and more attention of market. I think these two are the relatively safer havens in a market in which you cannot rule out further volatility in the short term.
Okay, so that's another idea from Mehrbun. Mehrbun, just before we move on, any disclosures with respect to both of the stocks we discussed?
I think clearly a disclosure is that since I'm recommending it, obviously I'm personally holding it. I have advised my clients to buy into it.
Okay, fair enough. Plenty of stocks on the move from the mid-cap and small-cap arena. Something like Lux Industries is now surging higher. And Castrol is putting on serious weight and momentum as well. Okay, Trident's numbers are out. Trident promoters are also buying. That's another added reason why the stock was excited. Profits up 53%, revenue up 18%. The market seems to like what it's hearing. So it generally seems to be a good day for mid-caps and small-caps. Mr. Tulsian, Castrol, is something really changing that's getting the interest back? Last 2 days have been very strong for this stock.
So to be honestly, no specific reason is known, but we are not keeping a positive bias because if we are talking of the EV kind of things, electric vehicles which are going to be the future, I don't think that Castrol can really be considered into. Maybe some kind of softness in the crude prices may have been helping them. Market may be expecting that the December quarter numbers will be good, and that could only be the reason.
Yeah, I think Mr. Tulsian has hit the nail on the head with Castrol, with the electric vehicles and so much stuff. I think perhaps the business-wise nothing much, but it used to be 500, 600 rupee stock. It's destroyed so much wealth, and perhaps this quarter you are playing for that, but nothing serious about it. Of course, just about 6% higher. By the way, Z Entertainment is interesting because it had a gap up, and through the day it kept falling. I don't know if we are expecting numbers any moment now. All of a sudden started to see a bit of a buying, so just keep an eye on the stock. Mr. Wilson, it's corrected from its recent highs. I think the breakout happened somewhere around 480, 490. At 450, what's the call on Z Entertainment?
See, Anuj, in fact, we have been keeping positive view on the stock, and if you recall when after Diwali day, when the management have announced the intention to sell their stake, 50% stake, it was ruling at around 430, 435. It moved to a level of about 480, 85. And if I take a long-term valuation range of the stock, it is already seen ruling at the lower end of the range. And even if the Q3 numbers are due today, and even if they are not seen to be very cheerful, I don't think that stock will really fall much, because ultimately now the entire call will be of the developments and who will be the potential buyer of this 50% stake, because promoters have already said that they are also interested in selling the higher stake if the potential buyer is willing to and write a check. Promoters are holding about 42-43% stake in the company. It's an excellent company, maybe in terms of their presence in the space. So we are expecting that probably yes, the developments will be more fructify on account of the stake sale news, apart from this Q3 numbers which are due today.
Okay, Mr. Sen, we leave it there today. Thanks a lot for joining us. We'll talk to you tomorrow. Bajaj Finance and Finserv. Well, after a long time, you're seeing this kind of move in both these names. Mehrbun, Finance, Finserv, both, neither, in your thoughts?
Honestly, both I like, and I would put my preferences Bajaj Finance at number 1, Bajaj Finserv at number 2. But Anuj, I think the problem with this sector right now is that they have gone through a little bit of turmoil over the last 2 months. Point number 2 is you cannot deny the fact that the valuations, certainly for Bajaj Finance, is extremely expensive. The stock has come down, no doubt about it. But even at the present level, if I have to defend the stock in terms of valuation, I will find it very difficult. So I will just say one of the very well managed company, possibly the best in the sector. Growth is good and the company will keep on growing, but in a market in which a lot of companies with high valuations, the D-Marts, the Shankaras, the Quest Corp, when they are getting punished suddenly, I think it really requires guts to buy at the present valuation into Bajaj Finance while knowing it's one of the better companies in this space.
Okay, so that's a couple of stocks that we've discussed. By the way, on the large cap side of the market, the other interesting stock, obviously, last couple of days has been Yes Bank. Continues to pile on more weight, about 3% up. Tata Motors is the other one. Mehrbun, before we let you go, thoughts on both of these stocks? I mean, they're interesting plays. Yes Bank back above 200, but the question is, can it start its northwards journey from here in a sustainable manner? And in case you'd be a buyer of Tata Motors now?
Well, I'll go to Tata Motors first. I think I've turned very negative on this stock for the last over 1 year. I think largely got to do with the fact that I was seeing it coming. I'm talking about global auto sales. And even right now, I think the global auto sales monitor or indicators are not very encouraging. So any company which has more than 50% of its turnover, whether it's a Motherson Sumi in the auto ancillary space, Tata Motors in the frontline companies, auto companies, I think the problem is that basically things are not very good as far as global numbers goes in the automobile segment. Point number two is, even in India over the last 2-3 months, certainly sales have slowed down. The point is, somewhere over the next 1-2 weeks, you and I possibly could be discussing the fact that interest rates in India could possibly come down. Will that be enough tonic for interest rate sensitive sector stocks to go up? Distinctly possible. And I also believe with the market. I know that the market understands all the things which you and I are discussing. And somewhere most of the stocks have got punished. I'm talking about the auto stocks. So they could be making a bottom sooner or later. So from a very longer term angle, this could be an interesting play. But considering that auto numbers are yet to show decent signs of going up or moving up after the last 2 months having tepid sales, I would not be in a hurry to possibly recommend anything in the auto segment, except stating that from here the downside could be very limited. Coming back to Yes Bank, I've never cared for it beyond the point. The point is that I feel that ICICI Bank and Axis are the better beta plays. As far as safer stocks goes, HDFC Bank, Kotak and IndusInd Bank are good. IndusInd Bank right now is facing its own short-term problems, but at the present level, I'm more comfortable holding on to that. Coming to Yes Bank, I think having a new CEO in place, who will take over ultimately? Will it turn the fortune of the company? I personally believe there are too many skeletons still yet to come out as far as Yes Bank goes. So at most, I would say it's for a punter. If he wants to punt thinking that, oh, if a good name comes, I'll get a 10-15% quick appreciation, distinctly possible. But from a fundamental angle, a 170, a 200 or 230, I don't think I've ever recommended Yes Bank, and I'm honestly not having too many reasons to possibly look at the stock afresh, despite the fact that an upside in the stock is distinctly possible from a shorter term angle if you have a decent name coming to take charge of it.
All right, Meherboon, thanks a lot for joining us today. It was good having that conversation with you. Meherboon's disclosure, of course, was on record. Let's move on now. Vaibhav Sanghvi, co-CEO of Avendus Capital Alternate Strategies, is with us now. Vaibhav, hi, good afternoon. So, right now, are you 100% long? I mean, perhaps not 100%, but say 80% long, more than that. How are you approaching the current scenario?
Yeah, as you rightly mentioned, Anuj, we can never be 100% long, and since we are a long short strategy, we will have positions on both the sides at every given point in time. Having said that, the market is consolidating at these levels, and in terms of our fund positionings, what we are seeing currently is, apart from the global turmoil and the global data, which has been, very, very negative, India is throwing up, interesting data in terms of on the economy. Maybe it is, WPI or CPI or adjusted IIP numbers on a 2-month basis. I think those are some of the data which are coming up, from the economy. At the same time, we do expect considerable easing in the credit policy, going forward as well. So we would be in a far better situation as compared to the global economies in the markets. Having said that, if those kind of markets fall, then we would not be decoupled in terms of the market performance. So that's something to take into mind.
Vaibhav, good afternoon, season's greetings. First of all, wish you a happy new year. So, we were just discussing this, Anuj and I, when the show started. I think one of the most, favored trades in the market of late has been by corporate banks. It's worked really well. Most of them are near their 52-week highs. Will this trade keep running in 2019? Would you still buy these stocks?
No, I mean, if you are speaking about, say, medium to long term, of course, I think we are bullish on, in fact, the whole banking and financial space. At some point in time, we were only focused on private banks and that also retail-focused banks. But at this point in time, looking at the growth opportunities, looking at where they are, I think across the banking and financial space, including retail banks or corporate banks, or even some amount of PSU banks, is something we are, looking at very, very constructively. We do feel that, there is huge amount of growth available some bit from NBFCs and other industrial growth also. As it picks up, you will see increased credit flow as well. So all in all, I am positive on the whole sector actually.
Okay, positive in whole sector. By the way, the move on Godfrey Phillips is interesting because it's a fresh round of move which is now happening on the stock, 8% higher. There's a bit of a consolidation which happened between 230 to 3, but there's a fresh second round of buying which is happening in the stock. I think there's of course some buzz about how the quarterly numbers could be, but in general there's quite a bit of buying in both ITC and Godfrey Phillips of late. Cigarette stocks making a bit of a comeback, so that's looking quite interesting right now. Vaibhav, now that we've seen both Infosys and TCS numbers, your thoughts on how to approach this space? It was easily the sector of the last year.
Yeah, I mean, we were bullish earlier, and we did call it pretty early, saying that IT is going to perform in the view that the business was bottoming out, and there was some amount of depreciation we were seeing on the currency as well. As things stand, what we believe is basically next year or coming year, we may see some bouts of dollar depreciation. And because of which one of the big tailwinds which was there earlier is now may turn into a headwind going forward as well. At the same time, business is as usual. We don't see an accelerated pace of growth happening in the tech sector. So we do feel that it can be probably market performer, rather than as earlier we were thinking about being an outperformer.
Vaibhav, the last couple of days and weeks have been really interesting as well because the valuation reality, so to speak, has finally hit home. The markets taught us that if you disappoint after being so richly valued, then the market won't spare you either. So how do you look at some of these fallen franchises, whether it's Eicher Motors or Page Industries or questions on Avenue Supermart? A lot of them obviously are, bordering on staples or basically discretionary consumption.
You're bang on target. I mean, this is a phase where, or maybe I call this is the bull phase where, probably we are in late cycle, and where what typically happens in these kind of phases, the moment some amount of disappointment and growth is there, you will see PEs actually deteriorating at a pretty sharp pace. We have seen in some names, and as well as consumer staples, if they don't live up to the growth which the street is estimating, then you might see some sharp depreciation in terms of PE. Having said that, we do still feel that consumer staples is something which can be looked at lower levels. This is pretty expensive space, but we do like the sector, and we would be waiting at corrections.
Okay, waiting at corrections, of course. What about the likes of Larsen and Toubro? We've seen some buying in Cummins over the last few days. This whole space, capital goods, ahead of elections, you think it's a good play?
See, ahead of election, I don't know about the capital goods space, but what we do believe is basically if you see the last RBI policy which came, it showed a system-wide capacity utilization of about close to 76%. If you go and rewind back at about 2014-15, it was riding around 68-69%, and we were talking about private capex coming into at that point in time, which for the right reasons didn't happen. But when the system-wide capacity utilization is 76-77%, the incremental chance of private capex coming into the economy is pretty high, and free cash flow, GFCF also is capital formation is also happening. So we do believe that from a medium to long-term perspective, we are getting very, very constructive on industrials as a space. It would be extremely important which pockets of industry are incurring that capex. In the last call, we did see some companies declaring their capex, but I think that is a trend we would want to see continuously going forward for at least next couple of quarters to call it at the big cycle going up.
Vaibhav, larger question now. On the market's construct, we've spent a lot of time in this range, and every time we approach this level of 10,900, 950, bulls kind of develop cold feet. Is this going to continue for the next several months, or do you think there's a real chance of a breakout here?
It's extremely difficult to tell, and I'll tell you that one thing is certain, at least for the first 6 months, is that the volatility would stay elevated. Now, for the first 3 months, it's probably likely to do with more of the global reasons than local reasons, and the next 3 months is going to be more of local reasons, namely from the election kind of general election volatility. So I think in the first 6 months, we'll continue to see elevated volatility. And post that, I think looking at where the earnings would pan out, which we estimate that should be pretty stable and are on the uptick, market would come smartly back in the second half. So it would be more of a tale of two halves. First half being very, very unpredictable.
All right, Vaibhav, we leave it there today. Thanks a lot for joining us. Always good talking to you. That's the view from Avendus. Before we take a break, just want to revisit Godfrey Phillips, because I think that was Mitesh's morning call when the market opened. Mitesh, thoughts here? Good time to take some profit home, or do you want to carry this position?
So Anuj, you were highlighting both these stocks, and both ITC and Godfrey Phillips look excellent on the charts. Godfrey Phillips, I think, has gone up by about 7.5% today, and the earlier highs on the 14th of September was 991. So maybe you would want to book part profits, but I think this stock is showing possibility of further upsides, and I would now revise the target to about 1050. So maybe book some, trail your stop loss to about 965 and hold for 1050.